Hello everyone. Now I quickly want to talk about the retracement trade. We've spoken a lot about the manipulation trade, where we want to see price manipulate after a nice tight consolidation. We want to see price manipulate. We get our initiation, our entry, and then we trade the continuation to the upside. But now, what about those days where we don't get a super clean Asian range, or we see just a push towards the upside while we are still bullish? Do we then take this as a short, thinking that this is the manipulation? That is often what the mistake is that new traders make when they start trading this strategy. They think, okay, now this must be the manipulation, so I'm going to take a short and I'm going to trade it towards the downside. But remember, higher time frame is still king, higher time frame is still the boss. So basically, when we see the retracement, or when we see the Asian range, and it's more like a trending range, and we see prices continuing uptrending, we then want to see, and only then, at Frankfurt Open, we want to see the retracement into a wick zone or an order block. So we want to see it into a wick zone or an order block. So once price has pushed up and we see that retracement, this is the retracement. We look for it that retracement to reach into an order block or a wick zone, and that is then where we take the long from, in that area. So just to recap, we do not have a nice Asian range. We do not see the push towards the downside and then up. No, we see price ranging up and continue to range up. And then at Frankfurt Open, we see the pullback towards a wick zone or order block. And that is then where we look for the continuation. So in this case, we trade the retracement. In this case, we trade the initial manipulation. So where we have a nice tight consolidation, clean manipulation into our areas of interest, and then the initiation, and then a continuation towards the upside. So this, I will show some of these examples in the backtesting session, and then just start to be on the lookout for those scenarios where you don't always see the manipulation happening immediately. You rather see it in the form of a retracement after Frankfurt Open, and then often London Open. If this is London Open would see price continuing to the upside. So that is then the two of the opening sessions that we're looking at. Another setup that I like to trade, and you would often see this on my Instagram as well, where I share these trades, is when we have price pushing towards the upside. So we have our manipulation off of the back of our continuation or our Asian range, and then price consolidates a bit again, and then we create, if you remember the stop hunt video or manipulation video, we have our equal highs, and then we see this final stop hunt, and then we see the move down that breaks the structure, and this is then where we look to take our trade, either at the low where price retests the low, or at an order block where we enter then at the order block or wick zone, depending on what aligns where the most confluences are. So then often these setups more often than not happen in New York session. So this is my go to New York session trade. New York session. So perhaps a lot of the times London session will cause the move towards the upside. This will be London session. We might have something like this, the manipulation towards the downside, then this is London session, and then New York reverses again back towards the downside in this way, where we have another stop hunt at New York open, and then a push down where we break the market structure. This moves, breaks the structure. The structure to the left, it breaks the structure, and then we just wait for the retracement where we then take a short position to the downside. And all of this is true for the opposite as well, for bullish examples and bearish examples. Sorry, I've did that one oppositely now. But yes, so I hope you understand. I hope that it was insightful and that you will start to look for these patterns on your charts.